Now, here's what the experts are teaching right now. Get the mortgage at the higher interest rate. When the interest rates go down, refinance to the lower interest rate. Okay. And then you're going to be fine. Let me show you something about this $350,000 at 3.25. Okay. Number one, here's the new payment, but this is a 30-year. Look at that, 1523 as opposed to $2,155. So if you look at your payment on this, you would say the 3.5% is better if you look at the payment. Let's go down to where it says how much interest you're going to pay. Remember, that's over 30 years. Now we're going to compare two 30-year loans. Okay, $198,359.20. Okay, is the interest to be paid over 30 years as opposed to $425,000. Now, if I look at two 30-year loans, guess which one I'm going to choose? The 3.25% interest rate. Of course, I'm going to choose the 3.25 over the 6.25 because I'm looking at 30-year numbers. But we don't want to keep it for 30 years. My average client pays it off in 7. So let's take a look at what's going on here. So let's take a look at the principal payment now. I need you to zero in on this. This is where it's key. This is what the people who own the bank understand, but the people who work in the bank don't understand. And this is what I need everybody on the planet to know, so they'll stop calling Kenyatta, are you in the room? My goodness.
I am.
So listen, and you all are hearing this, all right? What we're doing is this. We're trying to let people know that as you're hearing it on Clubhouse or anywhere else you're hearing it, they're saying that the lower interest rates are the better ones. Kenyatta, is that what you're hearing when you listen to people talk on Clubhouse?
Everywhere I go, just had a conversation last night at an event.
Okay. What about you, Credit Goddess?
Yep.
Okay. And the reason why I'm hitting this thing so hard, folks, is because people who have actually been to my conference and heard me speak are still saying the same things. Now, are they working against me? Absolutely not. We just get in a habit that we've been doing this forever, and the habits are hard to break. But when you remind them, they'll say, doggone it, I remember you saying that, but I just get in the habit of, in fact, it's part of my course. So let me show you what's going on here, folks. All right. So now at the higher interest rate, look at the principal payment. We attack the loan with the principal payments, folks. We attack the loans with the principal payments. And this is at the higher interest rate. So $4,100 takes out about 12 payments you never have to pay because, see, we want to choose when we give the bank money to save time and save interest. We want to choose when we give the bank the money. We don't want the bank to tell us what to do.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.